Is the world sitting on the biggest financial bubble in history? Some call it the everything bubble. And if it bursts, it could affect stocks, housing, crypto, bonds, literally everything. Today, I'll explain what the everything bubble is, where it came from, and the warning signs you should look out for. And if you haven't seen my channel yet, hi, my name is Sophia. I am your financial freedom coach, and it would really mean a lot if you could hit the subscribe so I can teach you more about money. Most people know about bubbles in different areas, like the dot-com bubble in the 90s, or the housing bubble that led to the 2008 financial crisis. But what makes the everything bubble different is that it's not just one sector, it's almost every asset class at the same time. How we got here. After the 2008 financial crash, central banks started slashing interest rates almost to zero and printed trillions of dollars to stimulate the economy. That made borrowing really cheap. With saving accounts and bonds paying almost nothing, investors started chasing returns in riskier places, like stocks, real estate, crypto, collectibles, you name it. The result? Asset prices started climbing and climbing and climbing. Why it is called the everything bubble. Traditionally, bubbles are isolated. For example, tech stocks in the 90s or 2006 housing. But now, stock markets are hitting record highs with way above historical averages. Housing prices in many countries have soared far beyond what income can support. And cryptocurrencies and NFTs have exploded in value. Even alternative assets like luxury watches, Pokemon cards, or fine arts have been selling for crazy amounts. That's why analytics call it the everything bubble, because nearly every market looks inflated at the same time. So what are the red flags people are watching out for? Number 1, record valuations. Stocks are expensive compared to company earnings, especially when you look at metrics like the Shiller-Cape ratio. Number 2, house affordability crisis. Prices have outpaced wages, and higher mortgage rates are squeezing buyers. Number 3, bond market distortion. For years, some government bonds had negative yields, which is not normal. Rising rates are now crushing bond values. Number 4, risky mania. From meme stocks to dog coins to NFTs selling for millions, hype has replaced fundamentals. And number 5, massive debt. Global debt is over 300 trillion. And if asset values drop, a lot of that debt becomes unmanageable. Now, what could make that bubble pop? Economics point to a few scenarios. If inflation stays high, central banks will keep interest rates inflated, making debt and assets more expensive. A recession could cut company profits and lead to layoffs, mortgage defaults, and stocks failing. Or a debt crisis. If a major corporation or government defaults, it could trigger panic across global markets. What does this mean for you? Now, does this mean everything is doomed? Not necessarily. But the point of the everything bubble is to show how interconnected our financial system has become. A stock in one area could ripple across multiple markets. If you're an investor just like myself, this means it's more important than ever to understand risk, diversify smartly, and not just chase hype. So that's the everything, how we got here, the warning signs, and what could make it pop. Now I want to hear from you. Do you think this is the biggest bubble of our lifetime or just another overhyped theory? Drop your thoughts in the comments. And if you want more easy to understand breakdowns on money, investing, and the economy, hit the subscribe button and make sure to give this video a like. Because the next few years in finance are going to be wild. Anyway, thanks for watching. Bye.